It's actually surprising that not more people look at this data point. Most people, when looking at technical analysis, simply analyze the price data, right? Is the price moving in a certain trend channel? Is it moving in certain Elliott waves, for example? Is it overshooting or undershooting? Maybe by looking at the relative strength index. But all of those approaches, they completely focus on price. And I found it interesting that it's not more common to actually look at trading volume, because trading volume is pretty much a gauge of how much attention there currently is on a certain asset. And so in this video, we're going to look at trading volume statistically. So we'll have a backtest on how trading volume is correlated to the price movements. Because let's look at this. When trading volume is comparatively high, that's also when price tends to be comparatively high. And then trading volume goes down and the price might decline, right? During times of low trading volume, we've got a low price, then the trading volume increases and the price increases. So one might argue that trading volume can be used in order to time potential, at least short-term tops, right? Once we peak, once we get an all-time high in terms of trading volume, maybe there's too much attention on a token and maybe times are heated, and so it might make sense to potentially sell, right? Attention is not constant. It potentially moves from altcoin to altcoin, right? Wherever the current news are. And when we look at this effect across assets, we can see this kind of pattern almost everywhere, but in some assets it's more prominent than in others, right? Let's look at Dogecoin, for example. Here we've got this incredible spike in trading volume with an outsized rally over here, another spike in trading volume, another rally, trading volume declines and the price declines. So it's very likely if Dogecoin at any point in time in the future rallies again, that the trading volume is probably not gonna stay at this low level. And so why is this correlation between trading volume and price so important? That's because for trading volume, we can get some kind of a range, right? We can say this is the highest trading volume has ever been, or this is a comparatively low trading volume. With prices, that's a bit harder, right? A price might just drop, say 20, 30, 40%. Nobody knows, will it drop any further? But with trading volume, we can pretty surely say that there is a certain floor and it's unlikely that we're gonna drop below a certain level in terms of activity on a specific token. So for this video, I've done what I like to do on this channel. I've looked at the numbers. What you see over here is the 1-year correlation coefficient of Bitcoin versus the trading volume of Bitcoin, or the change in trading volume, right? Now there's a few concepts to explain over here, but bear with me, it's worth your time. First of all, let's explain correlation. Correlation is simply a measure of how much do two variables move in tandem to one another. So let's say over here we've got the Bitcoin price, and let's measure another variable here in green. So for our case, let's say trading volume. And so we've got the price in red and the trading volume in green. And when we go like this, for example, in trading volume, we see whenever the price tends to go down, trading volume tends to go down. Whenever the price tends to go up, trading volume tends to go up, right? So those two values, they tend to move in the same direction at the same time. And such a behavior between two variables is called positive correlation. So when those two values, they always move in the same direction, we would say we've got a correlation coefficient of +1. Now the opposite is when two variables always move opposed to one another, right? So let's look at, for example, this blue line with this green line over here. This means negative correlation, so -1. And then there's the third scenario, right? That's 0. What does 0 mean? It simply means there is no real connection between the two values. So let's say we take again red as the price, and then we've got another value that sometimes goes up, sometimes goes down. It pretty much does whatever it wants, and there's no real correlation between whatever is going on. That's 0 correlation. Now you can measure correlation across different time periods, right? You can just look at, say, this time window over here, and you could measure the correlation coefficient over here. Then you could go on and measure this in the next time window. And the reason why I want to make such a continuous analysis of the correlation coefficient is because maybe there's a change of how those two assets are connected to one another over time, right? Maybe at the beginning, they look very much highly correlated, but then once you measure further, maybe they suddenly look negatively correlated. And so that's what this graph over here shows. It shows on a particular day, how did the Bitcoin price move and how did the Bitcoin trading volume move? Did the price go up when trading volume increased, and did it go down when trading volume went down? And what we can find here over several years of data, right? This is 3,268 days. What we can find is that for Bitcoin, at least, there's really no strong correlation. Sometimes the price and the trading volume goes in the same direction. Sometimes it doesn't. It's always pretty close to 1. So the maximum value we could potentially get is +1. The minimum value is -1. We don't even plot the entire range over here simply because we always stay so close to the 0 line over here. So I find this result pretty interesting because it's pretty different to the intuition we would get, for example, by looking at the Dogecoin trading volume, right? One would expect when attention is high, when maybe a lot of people talk about Bitcoin, that the price might go up, and once times slow down, nobody talks about it, price goes down. So you would expect a high correlation coefficient, something that would be at least above 0 for the majority of times. But for Bitcoin, that's not the case. And so maybe this effect is actually only really strong once we look at smaller altcoins, right? Because Bitcoin is already well established. It might simply just trade more on certain days than others. But once we look at smaller altcoins, maybe this effect is much more important in a way, right? So this here clearly seems to indicate that trading volume and price is somewhat connected. Now, before we jump to the result of the smaller altcoin, in this example, Phantom, if you so far enjoyed this content and you'd like me to make more of this kind of style of videos, please give this a like because it will help the channel grow and that means a lot to me. Thank you. Now here we go. Let's look at the 1-year correlation coefficient of Phantom to the trading volume of Phantom. Very interesting, right? We had a negative correlation coefficient for quite a while, then a jump up, then some kind of stagnation, another jump up, a gradual increase, and a gradual decline with a crash over here. Now, what's going on? This is, by the way, approximately 2 years of data, a bit more than that. What I think what's going on is that during those jumps over here and over here, we basically had these massive attention-driven rallies. Or in other words, if there's no massive news that massively shifts attention, that massively shifts the price to a new level, trading volume and price movements are really not that much connected. But once something like this happens, once something major comes out, say, for example, a major release or an incentive plan for developers to move their applications to a blockchain, or whatever it is, once there is a certain driver that creates a lot of excitement, that's the only times where we can see this very high correlation. And once there's a lack of such news, we actually see a decline of the correlation. So trading volume doesn't seem to always matter. The correlation usually isn't that strong, but once a strong shift is happening, that's when we really have to look at trading volume. So most of the times we can basically forget about it. We don't really have to look at it. There's no real connection between price and trading volume. But we definitely should look at it once it's very, very high, because that's when the connection between price movements and trading volume tend to really matter. Now, in order to verify this further, I looked at Dogecoin, right, where we had these very, very obvious connections between trading volume and price. And here we should now see that when trading volume is low, that the price movements, they are not very much connected to the trading volume. And so let's look at exactly that. Let's look at the correlation of Dogecoin versus the trading volume of Dogecoin. And again, we see these very large increases in correlation. That's basically when Elon Musk tweeted. And it stays elevated for a really, really long time. And it crashes down once the pump is out of that data series. So this move over here and this move over here is exactly 1 year apart from each other. This is where trading volume 30x'd in one day and the price went up by like 3x. And this is where that day went outside of the data sample, right? Because we always just look at a window of correlation that we move across the time series. And so that kind of a picture here pretty much confirms that theory, right? Without large news, without price moving events that create all the attention, you also do not have a lot of correlation between trading volume and price. So how do I personally use this information going forward? I will, like the rest of the market, most of the time ignore trading volume. Trading volume, when it's already comparatively low, doesn't matter that much. But when we get a real large breakout, when we get an all-time high in trading volume, then I'll continue to look at it very, very closely, because during those very specific points in time, we might indeed be comparatively heated, and it might not be a good idea to buy exactly during those times. If you enjoyed this video, you're probably also going to enjoy the content for the premium members, to be found at thebitcoinstrategy.com. Link is also in the video description. We've got daily market updates. We've got tutorials on how to make these kinds of analyses. And of course, a chat where you can ask me any questions. If you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, there's also a public chat to be found at Bitcoin Strategy channel. Simply search for that within the Telegram app. We are around 1,600 people over there. See you next time. Bye-bye.